Hello everyone, welcome back to Just Invest Today. In today's video, we're talking about Alibaba Tencent. We're talking about this new Seeking Alpha article that just came out. Is this one of the best opportunities right now in our life? Is this reminiscent of 2009 Google? This is what this article pretty much is telling us. Do we believe it? I want to go over this article, figure out if this is accurate or if this is false right now, because Alibaba, Tencent, they're selling out its freaking lows. I can't believe Alibaba right now is selling lower than its damn IPO price. It's crazy right now. And these are companies with the biggest moats ever. The competitive advantage is none other. One app has over 900 million active users, Alibaba. Tencent, we already know how dominant Tencent is. It's WeChat platform. Every single person in China needs it, uses it, but these companies are selling like it's nothing, like it's freaking Home Depot or some leftover corner store. That's where these companies are selling at. So let's go over these results, these growth projections. Let's go over valuations and what you think about what's happening in the market and this China discount. Before we get into this video, like it, subscribe to my channel, please. Like it. So Jordan lays out his main thesis for this conclusion that Alibaba, Tencent are reminiscent of Google in 2009 because of the price it's trading at and pretty much the dominance of the company. With the risks that happened back in 2009, 2008, with the Lehman Brothers whole situation, the whole market crash, the housing crash crashing, and that having a substantial effect on the market. This exact same thing is happening in China with the real estate crisis, on top of zero COVID policy, on top of the escalation of Taiwan and China. So all of these things are contributing to this huge China discount right now. Plus the whole US and China relations is kind of going sour. So do you think this is kind of close to 2009 Google, or the risk way higher when it comes to China right now? Because when you look at it, this is looking at a forward multiple. So 2022 Tencent, PE trading right now, 13.1, Alibaba, 11.8, Google, 11.6 when it was in 2009. And you have to remember too, Alibaba and Tencent are stronger companies than Google was in 2009. Maybe not as much growth, but still, the whole predictability of Alibaba and Tencent is way more predictable than Google probably was in 2009. Learning what we know now of how dominant the companies are. So price to sales 4.2, Alibaba 1.8. Remember, this is Alibaba we're talking about. The strongest e-commerce company in the world, or probably in China. In China for sure, like there's no doubt about it. 2.2, price to book 3.2, 1.6, 3.4. Return on equity 22%, 13%, 16%. Net margin 32%, 15%, 19%. As you can see, Tencent is kind of at a premium. Alibaba is cheaper than Google was in 2009. This is all because of what's happening in the economy today. Alibaba in 2020 was trading at $300 before the tech crackdown. Are you saying the fundamentals changed, that it will never get back to those highs and even further going out? What's your reasoning? Why do you think that? Tell me down below. Leave your comments down below. If you think 300 is just not attainable after what the tech crackdown did to all of these stocks, all of Alibaba's, Tencent, JD.com's. Moving on to the next section of this article, shout out to New Money for this amazing chart showing you the global asset classes and how they're so much different from China, US, Japan, and UK. You can see that Chinese citizens invest most money in residential, then fixed income, and then equity. And you can see how that's going to be playing out in the next 10 years. As you can see, residential market for China has been going down like crazy. So maybe people start getting more into equity, because people right now are not investing into a lot of stocks because they think it's all risky, the Chinese citizens. On top of that, Alibaba is doing a primary listing in Hong Kong. So this is going to allow the citizens to invest directly into Alibaba. So hopefully that opens a lot more eyes to Alibaba into the stock market. So hopefully that makes a big difference going forward. We are going to see in the next 5 to 10 years. Then he talks about deep economic moats for Alibaba and for Tencent. We already know about WeChat. It's the best messaging app, social media platform, payments, their gaming division. They have so much going for it. It's probably one of the most dominant apps ever right now in the world. That's like unquestionable. Then it comes to Alibaba with his 900 million plus users, pretty much reaching 1 billion right now, daily active customers, users, however you want to put it. And top of that, they have Alipay. On top of that, they have the international growth. They have cloud, Taobao, the biggest e-commerce platform. Come on, guys, this economic moat is like so deep into China. It's pretty much unpenetrable, but we still have the risk of the government, and that is the main thing. They think the government is going to take down Alibaba and Tencent. But remember, the Premier League came out and said that they're looking to help these tech companies. So that's how I can see the bright side. They're coming out and pronouncing that they are not trying to kill the companies. They're trying to help the companies. They're trying to make it more even and fair play. They don't want one company just to be dominant over the whole Chinese sector. Do you believe that? Maybe you don't. So you're not going to invest into China. Honestly, I believe what they're saying. I don't think they're trying to kill their companies. And that might be more biased, but who knows? There's going to be more fear and uncertainty, as he talks about, with the whole Chinese-Taiwan war might happen. If that happens, then bets are all off. But when I'm thinking about that, wouldn't that just kill all the stocks in the market? Like, I'm thinking every stock would crash, not just stocks in China or stocks in US. Like, every stock would pretty much crash if there was actual tension like that. So in my opinion, it could be a risk, could not be. You have the VIE structure risk. We have the uncertainty with the accounting. But as you can see, there's been so much progress in that section. I think that's going to be fixed. So the uncertainty there is not the same in my opinion. Then they have the decoupling of US and China. I don't believe it because they need each other so damn much. I just can't see them getting too far apart. So that is my opinion again. Tell me what you think about that. Next section, we have the valuation of these companies. Do you think these expected rate of growth is too high? I think this growth of 15% moving forward is pretty much too high. 50% for Tencent might be too high, but I can kind of see where he's coming from. The author of this article, Jordan, is predicting 20% growth annualized returns for Alibaba and 18% for Tencent going forward. I don't think that's too crazy, especially at these prices. And you can think that from these macro lows and zero COVID policy, I think Alibaba Tencent can make a huge comeback, especially with their track record of just having amazing CEOs kind of doing the right thing and kind of remaining true to themselves. I think it can go forward, maybe 15%, especially if Ali Cloud does amazing. Tencent gets back to getting into gaming, heavy on the payment section. I believe potentially it can do that, but it doesn't even need to grow this fast or grow 15% to have amazing returns, in my opinion. Just having the cash, buying back shares, have all these stock options in all these companies provides the majority of the value of Alibaba and Tencent without even the growth. So he's saying earnings per share 7.34 forward, 50% growth, $30 estimate in 2032, 7.5 terminal multiple, $525 share price at 20% annualized returns. And then you can see the kind of same thing for Tencent, 15%, 17.5 terminal multiple at $193, 18%. So I'm not too far off from those predictions, maybe a little bit lower, maybe 450 target price in 2032. Who knows? Especially when they're doing buybacks, and I can see cloud growing way faster than people actually predicting. And if the multiple that people give it, since in 10 years, I don't think the sentiment for Alibaba or for Tencent are going to be this bad. I can see it growing to 500 very easily. So do you think Alibaba has a chance to have this huge run till 2032 and Tencent have this huge run to 2032? What do you guys think about these companies, their valuations? What are you expecting from them going into the future, guys? Like this video, subscribe to my channel. Peace.